The Fed minutes show fears of Trump's policies stoking inflation. Minutes from the U.S. Federal Reserve's January policy meeting were just released. Here to discuss them is Liz Miller of Summit Place Financial Advisors. Liz, you've had a few minutes to look over the minutes of the meeting, and what are your thoughts?
So I take two things from here. The bottom line message was a message that as long as the economy stays good and inflation where it is stays where it is, the Fed governors are very comfortable doing nothing at all. They don't see any need to ease further. Now, for me, that has two messages. The first is that they continue to be very data driven in the moment. They said they want to watch employment, they want to see inflation, move more towards this target they have of 2%. But being data driven doesn't mean looking forward. It doesn't mean projecting for the future. So that leads me to the second conclusion of this. They made some vague comments about worrying about the potential of the debt ceiling going forward and how that could affect the economy. And I take that to say that even though the Fed is supposed to be apolitical, and really is apolitical, they're sharing the exact same uncertainties that we're seeing across all investors, in that they're trying to anticipate how the economy or different forces fiscally might change under the current administration.
And I think that there were also some notes about how they had been approached by some corporate CEOs who said they would, in fact, have to pass on some price increases based on Trump's tariffs. Is that right?
They made some talks about the upcoming tariffs if they come through. That seems to be such a big question mark that is flowing through everything we're seeing in the markets, and seeing it in the Fed minutes just adds to that point that everyone who's economically invested has a lot of uncertainty right now.
So let me ask you this. Amid all this uncertainty, where in the markets are you seeing certainty?
We're almost a full 2 months into this year, and I think what we've seen in the markets continually is there is this cloud of uncertainty, and we keep seeing it bubble up even as indices make new highs. But when we pull back the layers, the strength in the market continues to be steady eddies. It continues to be individual stocks that have a very clear future, and we know the path they're taking. And what's swirling all around this is investors trying to figure out what will be the fiscal policy going forward this year? What will be global policies? What are the global compromises that this country looks like it's going to make for the sake of global stability? None of those things do we really have answers yet. We just keep getting tidbits of communication. And until we get answers, then markets are going to continue to swirl with this level of uncertainty and a focus on reliable stocks that have proven stability throughout uncertainty.
So what are those reliable stocks? Because right now, other than meta platforms, they don't appear to be the so-called Magnificent Seven that drove the markets for the past prior 2 years.
So as we look sector by sector, it's not quite the Mag 7, of course, those have sort of gone sideways a bit, but we're seeing a lot of strength in communications. We're seeing a lot of strength in sort of the staple oriented retailers, like you see new highs with Costco and new highs with Walmart. And these are areas where we know consumer spending will continue and we know the business spending will continue.